Do you believe that, with your current wage, saving money is practically impossible? Even though it's much simpler to save money when you're earning a lot of money, it is absolutely viable to do it on a low salary. I will thus share with you 7 useful techniques to save money on a low salary in this video. But before we jump in, please like and subscribe below for the YouTube algorithm. Tip number 1. Cut your housing expenses. Whether you own your home or rent, the cost of housing will be your biggest monthly expense. According to many financial gurus, your monthly after-tax income should not be more than 35% of the sum of your rent or mortgage payment and other obligations. And although this item consumes a significant portion of your monthly income, it also has the most room for cost savings, allowing you to effectively save more money even if your salary is lower. There are many strategies for renters to lower their housing costs, with the first being to choose a less expensive apartment. Instead of continuing to rent a 2-bedroom apartment, perhaps a single room in someone's home will suffice for your needs. If you don't want to move, though, it might be time to look into alternative options for lowering your existing rent. Negotiating an exchange of your services, such as remodeling for a rent decrease or consenting to send a longer contract if your landlord needs tenant security, are both examples of effective techniques. When I used to rent an apartment, I traded monthly bookkeeping and tax guidance for a few extra $100 in rent savings. I was able to save money while making a modest salary because to this straightforward exchange of goods and services that saved me thousands of dollars over the term of my lease. And the advice is slightly different if you're a homeowner. To save money, you generally don't want to move out. Over time, even seemingly insignificant actions like turning off the lights and using less water can add up to significant savings. However, renting out a room is the most effective way to cover your living expenses. You may easily earn an extra $100 per month by renting out a room in your house. This will help you pay your expenses and provide you more money at the end of the month to put in your piggy bank. Tip number 2. Reduce debt. You must avoid debt at all costs if you wish to save money while earning less than you'd like. This is due to the 2 ways that debt prevents you from saving. First of all, debt requires regular payments. Every month, creditors will come to your door asking for money, thus avoiding that debt will put extra money in your pocket at the end of the month. Second, debt is typically accompanied by a monthly interest payment. For lines of credit, the rates are normally between 3 and 5%, so for a $10,000 loan, your monthly payment would range from $25 to $40. Even while this appears to be a little sum of money when compounded on a monthly basis, it can start to build up. You may begin to understand how having debt might make saving on a low income a difficulty when you add up all of your payments and the associated interest fees. When it comes to credit card debt, the problem is only made worse. As of 2019, according to creditcards.com, the average interest rate on credit cards is 17.65%, making it expensive to accumulate debt. If you have a credit card balance of $6,348, the average balance per U.S. adult, at that rate, you'll be paying credit card companies about $1,120.42 in interest each year. Therefore, you must avoid debt and the related interest payments at all costs if you want to save money on a low salary. Tip number 3. Limit your spending on entertainment. We all want to have fun, but for many people, it comes at a significant expense. Your budget can suffer greatly if you go out to eat, go to the bar after work, see a movie, or make other entertainment-related purchases. But fortunately, need not. Going out to the clubs with my pals was my main source of entertainment when I was younger, but sadly, most evenings were rather pricey. Most nights, I easily spent $100 between getting to and from the bar, buying drinks, and paying the cover. As I grew older, my focus switched to increasing my riches, but I didn't want to miss out on my friends' company. This prompted me to come up with fresh ideas for inexpensive ways to spend time with my friends in a meaningful way. Walking with my friends has been one of my favorite substitute activities, but some other suggestions I've made include hosting dinner parties at home rather than eating out and watching a movie on Netflix rather than going to the cinema. In conclusion, everyone needs to have a good time, but doing so doesn't have to cost a fortune. Tip number 4. Know the difference between your wants and needs. Spending money certainly makes us feel good, but if you're trying to conserve money and have a limited income, you need to be able to distinguish between wants and requirements. For instance, even though you probably don't need to, you might want to upgrade your phone to the newest model. Even though you undoubtedly already have a lot of great shirts in your wardrobe, you might want a new shirt to wear this Friday. When your income is low, you must be especially careful and limit your spending to your essential costs. So how do you determine what is a need and what is a want? Anything that is necessary for my survival is what I prefer to refer to as a need. These are the most fundamental necessities, including clothing, food, shelter, and transportation. In its most basic form, taking the bus also gets you from point A to point B, therefore buying a Ferrari is transportation, yes. Basically, everything that doesn't fit into your necessities category is a desire item. Anything that is in addition to something you already own falls under this category. Consider upgrading your phone to the most recent model solely to gain a camera with an additional 2 megapixels. You can't keep your expenditures to a minimum forever, of course. So, here's what I advise if you do want to spend money on a desire item. Decide on a monetary target that you wish to reach, such as saving $1,000. When you reach your objective, you can go ahead and get the thing you've been desiring. Two things make this method excellent. First, it encourages you to set financial objectives, and second, it allows you time to consider how much you really want the thing. It happens all too frequently that we make impulsive purchases and then regret them. In order to ensure that you can save money on a modest salary, you must be able to distinguish between your wants and requirements. Tip number 5, budget your grocery spending. One of our bigger monthly expenses is expected to be the amount a family of 4 spends on groceries, which comes to close to $1,000 each month. But it's not impossible to be able to reduce that number in half with a little forethought and the tips I'm about to share with you. Meal planning is the first step in reducing your monthly grocery expenditure. This will ensure that you only purchase what you actually need and will also be a step in the right direction for your health. We waste a lot of food, whether you're aware of it or not. According to a 2018 Science Daily study, Americans throw away an average of 1 pound of food per day. If this could be reduced, it would result in significant grocery store cost savings. Planning ahead will also enable you to purchase foods that are on sale, reducing your weekly shopping spend from the average $250 to as little as $200, resulting in more money in your pocket at the end of the month. Eat less meat is the next step in cutting your grocery bills. Since meat is by far the most expensive grocery item you can purchase, cutting back on it is simple. Now, I'm not saying that the only way to save money is to go vegetarian. However, you may significantly reduce your grocery price by consuming less meat or substituting cheaper options like legumes. The last piece of advice is to only carry cash with you when you go grocery shopping. All too frequently, individuals arrive to the grocery store ravenous and eager to load up their trolleys. This is made possible by the seemingly limitless capacity for credit purchases. Instead, make your purchases in advance and just bring enough money for the things you actually need to avoid letting hunger rule your decisions. Tip number 6. Adopt a zero-sum budgeting strategy. You consciously spend every dollar you earn when you use zero-sum budgeting, but not in the way it sounds. With zero-sum budgeting, you allocate your income to each of your expense categories before designating any extra money for your savings or investment account. Let's utilize a real-world scenario to demonstrate this budgeting strategy. Using the zero-sum budgeting approach, you would allocate the entire $2,000 you earned each month after taxes to your monthly spending line items. Rent, auto payments, petrol, groceries, and entertainment are examples of typical costs. However, you would add a line item for savings if you used this method. You would assign your entire $2,000 to the light things once this list is complete, which would require you to set aside a portion of your income for savings. This method works especially well for people who often realize they have little money left over for savings at the end of the month. However, if you use the zero-sum budgeting approach and adhere to your initial spending plan, your bank account will grow. Tip number 7. Automate your savings. Automating your savings is the last step to ensure that you can save money even on a modest salary. I consider setting up automatic deductions from my income with my company one of the best things I've ever done for my finances. In essence, these deductions permitted me to send a portion of my paycheck into a savings account as opposed to depositing the entire sum directly into my checking account. 10% of my salary after taxes, which I had set aside when I first started this procedure, went into my savings account. But as time went on, I discovered that I could increase this to roughly 20% and treble my monthly savings. Now, I believe there are two main factors contributing to the success of this saving strategy. I was able to determine exactly how much I wanted to preserve first. In fact, you may tie the two money-saving strategies together by using automated deductions to set your deduction to the amount you've specified as monthly savings in your zero-sum budget. Second, it freed me from the worry of having to save, allowing me to concentrate on more important things like honing my abilities to increase my income. Making more money is the number one way to save more money, I frequently advise. By freeing up my mental capacity, I was able to take on more freelance work, earning the additional cash, and ultimately increasing my savings. Thank you for watching. Don't forget to hit the like button, subscribe, and hit that bell notification for more videos like this.